Hey, everybody. Welcome back to Eggs, the podcast. We've got special guest, Marshall Darr, co-founder and CEO at StretchDollar with us. How are you, Marshall?
I'm good. Thank you for having me.
Absolutely. Thrilled to death to have you here. So I guess let's start, kind of at the beginning. Maybe give us a little bit of background about who you are, where you come from, and why we're talking today.
Yeah, absolutely. Well, I originally grew up, I guess everybody grows up originally, but back in the day, my parents actually met at HP. So I grew up in Cupertino as like a second generation, like techie kind of person, just thinking that startups were how everyone did everything. I tried to start my own when I was about 25, got a bit of a founder stipend. Was making like $3,000 pre-tax a month in downtown San Francisco, splitting the studio 4 ways while trying to launch like a real estate agent support kind of startup. I didn't know what I was doing. It failed for the typical reasons 25-year-olds first businesses don't work out. And then landed at a company called Gusto, small business payroll company. I was their first email marketer over there, but in typical startup fashion, got there and there was nothing to trigger emails off of. So wound up building out most of their marketing ops tech stack. When I joined, we had around 40,000 small businesses on the platform, and I left when it was around 200,000. So we got quite busy. Went from there to a company called Decent that was trying to effectively build a health insurance company from the ground up, was running sales, marketing, product intermittently, and, a few other things. We raised about $50 million there. Didn't quite work out, but from there, that sort of is what launched StretchDollar, which is what I'm working on now.
Great. Well, so maybe let's talk a little bit about that. What is StretchDollar and what do you guys do?
Yeah. So I sort of, over the last 10 years, I've been pretty consistently working on a very annoying problem, which is how you get small businesses health benefits they can actually afford and that they actually want to use. Originally, that was one of the things I worked on at Gusto, spent 5 years at Decent trying to build it from the ground up. And ultimately, one thing I was consistently hearing while working with these small business owners is even the ones who had the money to afford it would get overwhelmed and ultimately be like, I just want to offer people the money and let them pick for themselves. That's sort of what we built at StretchDollar, where it's an alternative to a traditional small group plan where you have to pick the one carrier, make everybody switch over, maintain that participation, do all of that hubbub. And with us, it takes about 10 minutes. We're functionally a fintech alternative to a traditional small group plan where you can offer pre-tax funding to your employees and your employees can use that to pay for plans that they ultimately own. Our brokers help them find the policies, and ultimately all you really have to do is set a budget. So we were the first clients on it ourselves, offered everybody $300 a month, and I have employees in California who are happy and employees in Pennsylvania who are too.
So that's a daunting department to tackle. Everyone kind of thinks that the healthcare system in the U.S. is pretty much garbage, and the whole setup is just really hard to navigate, let alone when you navigate it, you still end up with huge bills. And as a small business owner myself, and Ryan could probably relate, he actually has his wife is the one that probably provides the insurance for the family, because as a small business owner, it's really hard to get insurance. And if you just get it on yourself, it's really expensive. So for like an application like yours, the $300 that you're giving your employees, what kind of coverage does that get them? And I mean, is it actually worthwhile? Is the deductible so high that it doesn't make sense?
Yeah, that's a good question. And what we've sort of found is it depends regionally. And if you're in downtown Manhattan, things are going to be expensive. I live in Philly, and I'm on a $0 deductible health plan, Highmark Blue Cross Blue Shield, cost me $325 a month. And so ultimately I get that 300 covered. I pay the 25. We have an employee in San Francisco, who's on Kaiser. She grew up on Kaiser, loves Kaiser, was able to find a plan where her entire premium was covered and she could keep getting care out there. I think one of the tough parts about group coverage is you have so many people with so many different preferences and needs that you're trying to cover all at once with a big group policy. And that leads to a lot of waste and a lot of cost in increases. Over the last 20 years, the cost of group health coverage has gone up by about 14% every year. Individual policies, they still go up, but closer to 2 to 3. So in a lot of markets, it's actually cheaper to be on an individual policy than a small group would.
It's interesting. There's so many different options. I mean, what is it? Obamacare, and then the last employer I had, I can't even remember what they were under, but my deductible ended up being so expensive that by the time the year was up and I ended up kind of not working for them anymore, I didn't get any benefit out of the insurance that I paid into because the coverage that I needed was all part of the deductible I had to pay anyways. So I'm kind of jaded in the healthcare industry, and I'm at the age where I need to start getting healthcare because I'm probably going to be diabetic in a year and a half. And, it's just one of those. So it's like I actually hate all of this, and having this conversation with you is probably good. So
no, I hate it too. Like health insurance is just too complicated and too expensive, and most of the time people don't get anything for it. Like high deductible health plans themselves frustrate me to the end of the earth because they were invented by some health insurance wonk to try and encourage shopping behavior, to try and encourage people to go out and like get free MRI prices, but you only know how much things cost after they bill you.
Yeah, exactly.
Shopping's
like
impossible.
I went and got like my back hurts, and so I went and got an X-ray. $1,000 later, it's still not covered by the deductible, and it's like, why am I paying into this? What benefit am I even getting out of this? Because I'm paying for cash anyways. I might as well go and claim I'm broke and then try and negotiate the price down myself. It's like and then they go and anything you get is so inflated that it's like my dad's diabetic in medicine is like astronomical. Like the fact that they can charge that to begin with. Anyways, this is not your business. This is not what you do. And I'm going on a rant, and I'm sorry, but it's just so frustrating for small business owners like me that just can't A, afford it, and B, don't even think it's worthwhile. And so
no, I mean, I agree. And that's honestly like part of why we're here doing this. One of the interesting things about what we're doing is in certain situations, employees can actually waive what you're offering and accept that subsidized Obamacare, subsidized government coverage, and it costs you nothing out of pocket. They also get an enroll off cycle. So that doesn't apply to everyone. That's really some of your like lower wage employees, but most of the time we can find them a pretty good option that, otherwise they might not go with coverage. We signed up, there was a 16 employee plumber out of, I think, Nebraska. A lot of those guys had never had coverage before in their lives, and we were able to find them stuff where a lot of their medications, instead of costing them a couple hundred, cost them $20-$30 out of pocket.
Yeah.
Yeah. No, I think it's really important, and especially for those kinds of workers, right? The sort of blue collar types and because there is sort of a culture where a lot of people forego insurance because of the costs or whatever. And then, something catastrophic happens and they end up actually being a burden on the healthcare system because, either other people are paying for it or hospitals are writing it off and other people who are paying, or do carry insurance are subsidizing those losses and things like that. So, ultimately the system works better if people can be insured. But there's clearly something cultural here to overcome. And it seems like, especially in those kinds of workers or in those sorts of workforces. Yeah, no,
I absolutely agree. I think people have just gotten so little for so long from their health coverage that we've had people start foregoing it entirely and finding their own like primary care physicians, and trying to like cobble together their own thing. But the fact of the matter is that like healthcare related expenses are the leading cause of bankruptcy in the U.S., even for people with insurance. So it's really important to find the right plan. We also have a claims negotiation team. So if anybody gets a bill over $500, we'll work to negotiate it down. And on average, we get that reduced by about 60%.
Oh, that's
I
awesome.
was actually
That's huge. That's actually a very cool idea because that's a big part of this. You mentioned earlier that you never really know what you're going to be billed until it's done.
Yeah.
There's no way to really do any price shopping. And it's funny too, because I think that that's a big reason that people forego, medical needs when they have them is, basically they're forced to make a business decision every time they need to get looked at. And
Yeah.
I have a lot of European friends, and especially the ones in Spain where medicine is sort of socialized. They have a really hard time wrapping their head around, this kind of thing. I mean, because they go to the doctor for a cold. They'll go to the doctor for every living thing here or there. But here, everything is a business decision. It's like, okay, this is going to cost me at least $50 for my copay. And if they find anything, or if I need medication or whatever it is, then it's going to be even bigger. And can I afford to do that? And, am I ready to take on a bill? And I don't know. I don't feel like health insurance or health coverage should be that way.
Ryan, you're the prime example of what's wrong with the whole system. I think it took you 10 years to pay off your firstborn. It's like
longer than that, actually. That was the deal. Our youngest son or oldest son now was 6 weeks premature and was in the NICU for 21 days. So he racked up about $250,000 of a bill back in 2006.
Wow.
So we were just freshly married. We had a house and a couple car payments and stuff like that. So we had our little mortgage and all that stuff, and basically no money to pay for those kinds of medical bills. And even with our insurance coverage and all that stuff, we still ended up out of pocket like $30,000 or $40,000. Wow. And so we had to take, what ended up being horrible financial advice, a sort of like a balloon payment kind of loan, because it was the only loan we could get. That was basically a second mortgage on the house. And we actually basically made payments on it every year or every month for 13 years. Wow. And then sold the house, and then it was finally paid off. But it ate up all our equity after 13 years. And basically we made the big joke that once we sold that house, we finally owned our son, right? Because until then it was, somebody else's kid for a while. So anyway, but I mean, luckily, we had the opportunity or the ability, even though it was kind of a sucky situation, we still had the opportunity to fix it in that way or to address it in that way. Right. So we were able to not necessarily drown, but there are a lot of families that may not have been able to weather that. And they're, and so I think, good coverage is a piece of it. And I think it's trying to figure out where the disparities are too, and how to get people the coverage they need. In that we had our baby the same week that a friend of mine from school had her baby, and they were a young college couple also, but they were not working. They were living off student loans. They were doing all that kind of stuff and just being full-time students. And they paid $0 for their kid, who was also in the NICU with our baby and who was also all this stuff. Yeah. And basically they walked away not paying anything for their kid. And we picked up 15 years of debt, you know? Yeah. And not to mention, we paid on that loan for 15 years or 13 years. And then, basically ended up paying the whole balance after 13 years. So we probably paid double what we borrowed. Yeah. So it was, not a great situation. So we look at that on the outside and we go, well, we had insurance and we did it the right way, and this is how we got stuck. And those, and those guys had nothing. And look at them go. They got a nice clean start. They got out of school. We all had the same student loans. We all had the same stuff at the end, except for they didn't have, $100,000 in medical bills to pay for. So it's an interesting thing. And so, but to the point about, finding good health coverage, I think that's where it's really important, right? Is we didn't have the coverage that covered the, because I just had my employer's plan. And, I certainly couldn't have planned for a child going into the NICU, and I couldn't have planned for all that stuff.
Well,
right? Their insurance didn't cover all that.
That's kind of the problem, is you can't really plan for stuff like that. And whether you're covered, you can only get the coverage you can afford. And really, I guess, your StretchDollar system, is that just trying to get you the best coverage for the lowest amount and fingers crossed it's enough? Sort of.
I think we have a lot of problems in this country that originate with how closely tied healthcare is to employment. And like you're ultimately like downstream from the decision your employer makes about what doctors you can see, what medical procedures are going to be covered. And ultimately, like that employer doesn't know. That employer doesn't know your medical situation or the fact that like you might be planning for a child over the course of this next year, or that it might even happen. And a lot of these employer plans have gotten expensive to the employer, and so they look to cut corners. And unfortunately, childbirth coverage and infant coverage tends to be one of the first ones to go. And so I've actually placed a few expectant mothers onto, expecting to be expectant mothers onto coverage where it's entirely covered, or they'll have like a sort of low copay to cover the instance. And like, first of all, Ryan, that sucks. That's
yeah. Luckily, it's under the bridge now. And now
Yeah.
he's really expensive because we're trying to get him recruited
He's going
into
to college.
So now he's more costly than he was the first time.
Yeah, unfortunately, I don't know of any coverage for that.
Yeah, I was going to say, keep your ear to the ground. If there's like college student coverage, I'm stoked.
Yeah. But ultimately, I think people should be able to make decisions about their own healthcare. I think most of these employers at their core, especially small business owners, like they don't want to be the plan administrator. They don't want to make these decisions for you. They want to provide some funding and let you make the best decision for yourself and your family. And that said, that decision process is complicated. That's why we have people on the phone to work with you, to help you pick the plan and help you understand your options. But we ultimately work for you when you're picking your plans, because like StretchDollar is a free to use platform. We don't charge the employer anything. Every dollar they put in goes to the employees tax free. And then we make our money off of the health insurance commissions on the plan sold. It's illegal to charge differently, whether or not a broker is attached to a policy. We really only make our money if people find policies they like and they keep.
Yeah.
So is that
no? And it's interesting that the point that you made about, because I guess I'd never really thought of it this way, that so much of our health insurance needs, or the way that we look at health insurance in this country, is really downstream from the employer. And as you're talking about it, I'm thinking, even in my own experience, I mean, after that situation and everything, and being self-employed for a lot of years, I was having to buy my own plans. And the decisions I was making were more financially driven. I was young. I didn't have like catastrophic issues that I needed to deal with. I didn't have insulin needs or something like that, any kind of chronic issue. So I was strictly looking at how can I get the best for the least amount of money, right? But these plans, there's a ton of bloat in there. That's stuff that we'll never need, that they sort of use to hit fringe cases and things like that. But I mean, they have coverage for stuff that, I don't know, this would be kind of a wild one, but maybe it's got maternity coverage in a plan that I'm buying.
Yeah.
And it's like, okay, well, I'm buying a plan, but I don't need maternity care. Right. And so it's silly for me to pay for it. But at the same time, like, so my premium is based on all this stuff that I don't need, and less on the things that I actually might need or might be more tailored to me. So it sounds like, and correct me if I'm wrong, but it sounds like the way that people can choose insurance coverage through yours. I mean, obviously you've got the plans that companies offer up, but it seems like maybe it's a little bit more flexible in that, like the example you just used, that you can grab a policy that does cover maternity care, and you can, buy a policy that has a different thing. Like, maybe it's a broader range of choices than I might get if I just went to my own broker. Yeah.
And we do have plans like specifically for different chronic health conditions. Like we have plans specifically for like diabetics, where they cover your insulin. They cover all sorts of preventative care measures. And the whole thinking on the health insurance carrier side, like we're not a carrier, we just help navigate, is that if they can get people involved in the system, they can actually keep them for longer. So it makes more sense to invest in preventative care to keep them healthy. The average tenure at a business of an employee is about 3 years. So there's no incentive to invest in things that are going to keep you healthy in 25 years by these health insurance companies, because they know you're just going to churn out. Ultimately, like their main priority is like, how do we get you to delay care for 3 years? And that's why the deductibles are so high, because if you don't have the money to take care of these little things early, and 3 years later, you're somebody else's problem.
Yeah.
Yeah.
That kind
Not to be a downer. I feel like this whole
No.
this topic in general is a downer. I mean, when you look at other,
it's a hard
we're the only nation that really hasn't figured it out. You look at like Canada, you look at UK, you look at Germany, you look at Switzerland. Every other country out there has a good healthcare system, and we don't, because it's capital based. It's not designed to help us. It's designed to help the insurance companies, and it really is sad that we can't figure this out. And it's nice that you're doing stuff like this and trying to create a company like this that addresses this issue, but there's underlying issues that have to be addressed first. And it's nice that I can go to StretchDollar as a self-employed person and find a plan that might be better than I can find elsewhere. It's where I'm the only employee. I'm in my business. I'm the only employee. I don't have other people that work underneath me. I'm not buying plans for them. Do you offer solutions for something like that?
Yeah, we can help you find plans. As a sole prop, I've spent a lot of time working in like how do you get freelancers coverage they can use and that they're interested in. But what you were just saying right there sort of tugged on this thread for me. Do you guys know how health insurance happened here?
No.
It was a wage freeze after World War One. Where inflation started getting out of control. So the federal government was like, nobody can offer anyone more money for any role for the foreseeable future. Companies were then trying to find loopholes. So they put together these deals with local hospitals and local insurance companies to offer it as an employer benefit. After that, 3 or 4 separate occasions, we almost had universal health care, but the companies lobbied that it was such an effective recruiting and retention tool that they wanted to keep it. And that's why healthcare looks so different in every other country, because just that quirk of that wage freeze. And I think we sort of get stuck thinking it has to work like it does now, just because that's how we're familiar with it, when it doesn't. Like there are many other avenues we can take to try and fix this. And ultimately, there are many things about this that bother me, but I feel like we sort of got like 60 to 70% of the way to universal healthcare, and then we stopped. Because we offer Medicare, we offer Medicaid. If you make below a certain income, you're covered. If you're over a certain age, you're covered.
My parents have Medicaid right now, and that itself is like jumping through hoops trying to figure it out, because what if you pick the wrong plan? What if you don't have this? It's like you're trying to ask a 75-year-old person to go through all these different things and say, what do I need in the next 10 years? And they have no clue, but they're stuck to it because they picked it wrong. And it's like, I don't know. Everything about it is designed to confuse the end user and to screw us over versus help us like it should. And it's the most infuriating thing to me. Well, there's a lot of stuff that infuriate me, but this in particular is one of those topics that really gets me going. And I that's apologize. Probably, go ahead, Ryan.
Well, I was just going to say, this is probably that 30 or 40% gap that Marshall's talking about, which is we got most of the way to some sort of universal care where everybody can basically be looked after. And then, for various interests, whether it's the business lobbies or it's, I don't know, if people want to get real cynical and talk about sort of, government corruption and money and all this kind of stuff, there's all these other things too. And I will say, so I run a marketing agency, but I spent a lot of years working on Aetna Medicare. And so I've watched how Medicare has been remarketed over the last decade as I've been working in their system. And I will say that it's getting better. Yeah. Like I will say that it's definitely come a long way from where it was when I started working in insurance to today. So at least from a marketing perspective, right? Or the way that they message things. the 65-year-old of today is not the same as the 65-year-old of 10 years ago. It's much more healthy or health conscious. It's much more preventative care. It's much more focus on being active and that kind of stuff. Now, it doesn't help people who are already older and in the system, but you can see that there's a little bit of an evolution happening, and they are trying to message and communicate, and obviously I'm not a Medicare customer, so I can only speak to my side of the marketing, but it's, it does seem like there are efforts being made where sort of the cultural winds are blowing one way or another, and they're having to adapt, whether they like it or not. I mean, I'm sure at the end of the day, the insurance company will still win, but but at the end, but I can see that there's some meaningful progress being made towards kind of like what Mike is describing, which is where it's impossibly difficult to know which plan to choose. It's hard to get the coverage or find the doctor or the whatever. There's a million problems with the system. But, maybe between the kinds of problems that Mike's referencing and that sort of gap in universal care that you're talking about, Marshall, maybe, we're on a trajectory to get there eventually. We just kind of have to keep fighting the fight.
Yeah, no, I agree. And I think it's the fastest, simplest way out of this, to be honest with you guys, is to adopt a system that works more like your friends in Spain or, how we keep hearing about Canada. And those have problems too. Don't get me wrong. Like,
I mean, that's the one thing. Yeah. Like our friends in Spain will go to the doctor for a cold. Yeah. But when it comes to, let's say they need a surgery or something, it might be 8 months,
or they might come here.
Or they'll come here and pay for it privately or whatever. Yeah. So it's for sure different that way. Sorry, Mike.
Well, and it's funny though, because like I know people that go to Mexico for dental care because it's half the price. Same thing for doctors and stuff like that. I was joking with Ryan before the show because I just got back from Alaska, and I was telling him, I was like, driving through Canada, every place I stopped, I was flirting with every girl I could so I could get health coverage. It's like, like I want to set up a Canadian dating profile just so you can get health, It's horrible to think that way, but legitimately, it's one of those things you think about. It's like,
and to Marshall's point earlier about just how inextricably tied health insurance is to jobs and employment. I mean, think about how many people who are taking jobs or choosing a position based on the benefits coverage. They're not even going, hey, I need to make X number of dollars per hour, or this job's going to help me grow as a human or whatever. They're not even looking at the kinds of things that you would want people to choose a job for. They're going, oh, will this cover my husband's insulin, or will this, whatever. And so they're making decisions that are, I guess pragmatic, but but they're not very feel good decisions. And but you don't even think about it, right? It's like you're doing your price shopping, but you're doing it third party through whoever your employer chooses, not taking the liberty of doing it yourself, I guess.
Yeah, and I do believe it fundamentally limits the evolution of small businesses in the U.S. because you have so many people who start a business but can only do so because their spouse is working a corporate job and they're covered through that. Or people who have been thinking about starting their own thing for a long time, but they're on a medication they can't afford if they leave their job. And you wind up in these situations where people are stuck working in this in corporate jobs they're not interested in and can't really innovate and work the job and build the life that they want just because the system gets people stuck. And a lot of things I'm frustrating about. And that sort of duality, holding that with the fact that, we are a company that helps people navigate the system that is. This is, in my mind, just a tiny baby step, and we need a huge leap. But at the same time, you don't ignore a fire in your front yard because you think it might rain.
Right. Yeah. So maybe this is a good spot to transition, and maybe we can lift the conversation a little bit from all our gripes off of insurance. But I think it's still maybe important, or from maybe a foundational business discussion, maybe we could talk a little bit about you getting into this line of work in the first place. So, I mean, obviously you recognized a need in the industry, which is insurance is wildly expensive and it's overly complicated. So you decided to go into building a business to try and address that issue. Can you talk about, making the decision to move into this business, actually starting to get, learning what you had to learn and building what you had to build? Can we talk a little bit about the process of building something like this? Because I think even though maybe it's, ostensibly an insurance brokerage at the end of the day, you know, there's still a lot to know, and there's a lot of legal implications, and there's all this kind of stuff. I mean, it seems like getting from zero to where you are today is quite the slog. So maybe we could talk a little bit about that.
Yeah, absolutely. And we've also moved pretty fast. So we're founded in April of 2023. Right now we have around 100 businesses on the platform, but we're growing by like 20 to 30% each month. We were sort of pushed into doing this way because most of the team at StretchDollar I worked with at my last company. The last company I was at had an issue happen and wound up laying off 66 out of 70 people. And it was trying to be a health insurance carrier itself. Fundamentally a lot more complicated than a health insurance brokerage with a fintech tooling. And I basically saw these 60 plus very qualified, very good people suddenly with a bit of severance, but ultimately losing their job, and just shot a shot, asked a few of them to start working on this thing I had in the back of my mind while I went to do what I could to raise a little bit of money for us to try and take a proper swing at it. And so had about 4 people from Decent join me in building StretchDollar initially, and wound up raising about 1.8 over the summer last year. We're just wrapping up our seed round now. That was a pre-seed, and things just started moving pretty quick. Like, we raised some money and immediately spent $400K on lawyers. Cause you know, that's just how this goes in the healthcare kind of industry.
One thing I don't like as much as interns as lawyers. So we're right there. There's got to be a lawyer joke in there, right?
Oh my God. One of the most frustrating things is like lawyers and CPAs arguing if it's a CPA question or a legal question, like just getting caught in a loop, and no one's a tax lawyer, but everybody blames it on them, you know? So we found some good lawyers that, and so, then we wound up joining as our own first customer last October. Good to work out the kinks ourselves, launching in November and starting to sort of scale up. But at no point in time did I feel fully ready for anything we were doing. But I was confident we had some good people that were going to work really hard to make sure that we could get there. It's scary, you know, it's scary to like launch a business, start taking money, and start, you know, helping people make decisions this big. But the fact of the matter is it would be very hard to make the situation worse than it is right now. And so even these like baby steps towards things that are a little better, a little cheaper, get people a little bit better covered is progress. And we've been lacking progress here for a long time.
So can we talk a little bit about raising money? I mean, obviously it's a weird time to do that, and sort of post-pandemic, people started to button down a little bit. I mean, there's still money out there, and I don't know. I mean, your pre-seed isn't like enormous, but you know, I don't know what your seed is like, but the, you know, I mean, even now, you know, a few years post-pandemic, it's still pretty challenging to find money out there. How are you, I guess, able to make a pitch that works for investors at this point? And I guess maybe it depends on the type of money you're bringing in.
It's a good question. I've yet to find the best answer. You just have to be okay getting a ton of no's. So for the pre-seed round, I think we talked to like 85 different firms and got 80 rejections, but 5 people said yes. And so nobody cares about those 80, you know? And like, I think you have to run your fundraising process like a sales process. You have to build a pipeline. You have to have more leads than you want. You have to be okay with getting rejected a ton of times. You have to take some feedback. You have to reject other feedback and sort of like build through that. I was lucky, you know, for so many reasons, but, at my last role, one of the things I ran was partnerships. So I was working with a lot of other founders. And when I exited, I sort of was able to get introductions to some of their funders. And if you can swing it, what I've found is like the best pathway towards like a very good meeting with a VC is being introduced by a portfolio company that's doing pretty well. And that's basically like the closest you get to a layup in these things.
Yeah. No, that makes sense. Was this your first shot at raising money, or had you done that in prior startup attempts?
This was my first shot at like this scale. I have raised like 60K before, which, you know, felt like a lot when I was 25. It is a lot. And then, you know, this was much bigger. But I was lucky enough to bump into a few people who like sort of saw the vision too. And it's funny when you're in the thick of it and just trying to like figure out whether or not what you're doing is real or not. Just a few people who are like, you know, even if they pass, but if they give you like a little nod, like, oh, this is pretty cool. Like that's almost like food, you know, to just keep going and keep building that, you know?
Yeah, no, that makes sense. Well, and related, I mean, you know, there's lots of different ways to build a business. I mean, how come you decided to go the funding route where you were taking on venture money or whatever type of money you were taking?
The $400,000 bill.
Yeah. So I like there's
we want to grow fast and
yeah. I feel like yeah, there's different ways to build a business. We had a lot of startup costs, like that $400,000 lawyer bill, the fact that we already had a team largely assembled that needed to start paying, you know, their mortgages and things like that. And, you know, I don't come from a lot of family money that can just write a blank check for, you know, a few years for us to get this off the ground. And so I love the idea of bootstrapping, but I just couldn't figure out a pathway for it, given what we wanted to do and given our sort of ultimate ambitions here. And so I think there's pros and cons to VC money. Like once you take it, you sort of light the fuse and like you gotta go real far, real fast with it. And like, I think it's been a blessing for us, and we've met a lot of people who have been hugely helpful outside of just the checks they've written. But in some ways, like some days I wonder what it would be like if we could have just like incrementally grown over the course of a few years versus just shooting out of the gate.
Yeah. Yeah. Well, and yeah, I mean, like we're saying, right, there's a lot of ways to do it. Yeah. So I don't know that there's a right or a wrong. And I mean, all the logic you just laid out makes a lot of sense for why you might need kind of an infusion versus, you know, a slower build. But no, I always like to explore, you know, the decision around what, you know, why people choose to either take on VC or not. And one of the things, or one of the points that you just made is huge, which is, you know, basically access to expertise too. You know, I mean, I'm involved in a startup that, you know, is basically kind of tangentially related to insurance. And so one of the things that we're trying to chase down are people to back that. Yeah. And the guys that we're talking to about backing that are, you know, giants in that space, right? So they're people who can actually help us. They're not just like writing that check, right? They're actually a benefit to you, or, you know, to use the sort of Shark Tank metaphor, right? Yeah. I mean, you want the check from QVC if you've got a product to sell. Yeah. You know? And so it's kind of that. So I think that's really smart. So, but I think it's really interesting to dig into why people do or make the choices they do, because there's, you know, just so many different ways of doing stuff.
Yeah. No, I really agree. And I think too, like I have to, like, I'll always keep mentioning how lucky we were. The first person we found who wound up invested, we sort of did the fundraising round initially on something called a SAFE, which is basically like funding up front with a promise for future equity once you do a price round. Basically, like if you're trying to carve out actual equity from your business for investors, typically there's like 70 to 80 grand of legal fees associated with that. And it takes like 3 to 4 months. That's what we're in the thick of right now. But back then we just didn't have the money or the time to do that. And so, the first person to put money in on this SAFE, had a similar investment in a similar company that didn't work out previously. But for the reasons that didn't work out, he was optimistic that we would. And so his like baseline familiarity with how this business can go off the rails, I feel like is like fundamentally helpful in why we didn't. But at the same time, like I was at the point where it would have taken money from anyone almost. So, like these sort of things, like it's sort of like a let them eat cake kind of analogy where it's like you should be very careful with who you take money from. Some people don't really have much optionality. Now we're at a point though where we got the option to really hand select some of our investors in the seed round, and I'm just very thankful to be where we're at.
Yeah, let's explore your website and the process behind getting started. Can I go to the website, create an account, and pay for the insurance right there, or are you listing options and then I have to contact an agent and go from there? How does it work?
Yeah, so it depends a bit on if you have employees. We sort of focus on like your role as an employer, getting them set up, and what you'll do is go through. We need a bit of information from you and about your business, and then we'll pull in sort of like localized guidance for like how much health plans typically cost in your area. If you're in Nashville, things are going to cost you differently than it would be if you're in New York or if you're in Fresno. Healthcare itself is very regional, and we want to make sure that the benefit you're offering is regionally competitive. And so you go through, sort of set your budget, integrate your bank account, and ultimately invite your employees. And then your employees and us get to work on finding health plans that they can use that money for, that are ultimately going to help them out. And so most of the health plan working for the typical employer happens on that side. If you're a sole proprietor, things work a bit differently because there's sort of like a different sort of tax avenue we take you through that involves us looking for plans earlier in the process. Ultimately, depending on the plan you like, you can actually pay for that through your business account. You just have to claim it as income at the end of the year. And we can get you set up in pretty much like 10, 15 minutes.
Interesting. How hard was it to build the site and get it set up?
Oh, it was a nightmare. And like, it's just so much paperwork. Like I've been like hours a day of paperwork for like a year now, but like what I've sort of like tried to keep in mind is that like it can suck for me so long as it doesn't suck for you guys.
Yeah. Well, and it's hilarious. I mean, that was one of the things that Aetna was, well, I guess probably every insurer is sort of famous for, is just the length of disclosure text that gets included with everything. Yeah. So as a guy that used to lay out all their marketing materials, like, I mean, we would get, disclosures that were longer than the piece we were laying out. So it's like, I mean, it was just wild, the amount of things they have to disclaim. So, so let's talk, I guess, too, a little bit about maybe what the future looks like for you guys. So, I mean, obviously you're a platform that's facilitating, or I guess a direct response to the way things are done today. But do you guys have a plan, or do you have any notion of how to move forward with that? Like, what are the future ambitions of StretchDollar?
Yeah, it's a good question. I think it sort of breaks down on two fronts, where everyone we've onboarded so far, once we get them set up for health, they've asked for things like vision and dental or retirement or life insurance or disability. Really, the list seems to go on. And we want to be able to help people out with those other items too. I think health is probably like the most important piece of that decision, but the end mission in my mind for StretchDollar isn't solve your health problems. It's making small businesses the best place in the world to work. And health insurance is a big piece of that, but that's not the only piece. And so trying to sort of spread out from there and solve more and more of these problems that small businesses have in a way that doesn't eat up a ton of time or money to do so. And that's sort of like our initial focus kind of with the product. Ultimately, over the course of the next 10 years or so, we think there's space for 1 million companies to be on the platform and us to substantially improve the lives of each employee we serve through that.
Yeah, no, that's awesome.
So I don't know much about this, but I'm going to ask anyways because you might.
Yeah, no. Go ahead. Yeah.
Do you know much about One Health?
One Health.
Wasn't it like kind of like an online health platform, an insurance platform that kind of I think Amazon acquired? And
Oh, One Medical. Yeah.
One Medical, yeah.
Yeah.
I don't know much about that at all. I just recently heard a podcast where they were discussing the customer support for older people, where they would call in with a health related question and like where it was an emergency and it wasn't like processed correctly and actually caused problems. And so I was, do you know what the platform is and how it works? What is it? And is it something that you guys go work with? I'm just,
Yeah.
sorry.
No, it's a good question. And so like, I would say in like the event of an emergency, every health plan that you get through StretchDollar will work with any local hospital, any local point of care. So if there's an emergency and you've gotten your things through StretchDollar, don't call us. We're like some paperwork nerds. We aren't gonna be able to like hop in a helicopter and come save you. But the good news is the people who do that are covered. And so you should always, call 911 in the event of an emergency, get to the first place of care. We'll sort out everything else afterwards and just like get to a place where you're safe. Ultimately, how you should think about engaging with StretchDollar is sort of like before or after. Like before in terms of like, can we get you onto the right plans to make sure your needs are covered? After in terms of like, let's work through these bills together. Let's see if like you should switch your coverage based on, how things have sort of turned out. And we can help you there. The interesting thing about One Medical is they were like provider facilities. They are provider facilities, but they're primary care clinics. And so people were coming to them with like heart attack symptoms or stroke symptoms and things that they just weren't equipped to service because it's more of a doctor's office than a hospital.
Okay. Yeah, I had heard the term and I was intrigued for all of 5 minutes, and then it's something insurance just lost interest. So.
No, I honestly, I think insurance has this sort of like unfortunate ability to have everybody's eyes glaze over, but like, I think they did that on purpose. Like they made this stuff super dense and super boring. So you don't understand how to use it. So you don't understand how to get your monies out of it, and they can keep your money. Basically, like if you really understood how to use your healthcare, most people would be receiving more coverage than they're paying for.
Yeah. So every insurance transaction I've ever been through has been a nightmare and a pain in the butt. And not even just health insurance, business insurance. I was a general contractor for a year or two, and my insurance for that was astronomical. And I never had a claim, never had anything, and it's still out at like sky high, and just all my profits are going to pay for the insurance to be employed in the first place. And it's just everything about it is just a horrible taste in my mouth. And I don't think I'll ever get to the point where I'm like, oh, yay, insurance. Awesome.
Yeah, insurance. Yeah. No,
but I will ask, sort of based on your experience, Marshall, I mean, are you starting to see any kind of evolution in the way that we're doing medical care? So like there's sort of the traditional agency model, which I think we've been sort of discussing at length in this episode, which is you hire an insurance company, you buy their plan, whatever. But, just a point around that One Medical, for example, or I mean, you're seeing a lot of these online care things, ones that are coming to mind are like Hims and Hers, and there's a bunch of these kinds of services where you can get like certain niche things handled that you might have gone to a doctor for in the past. Right. So, I mean, there's a whole range of these kinds of things, even all the way down to like physical therapy. Yeah. Like, so I had jacked up my shoulder not too long ago, and I was able to go to just a physical therapist's office and do like a little cash pay thing, where in the past I would have routed all that through my insurance. Right. And so I'm wondering if, kind of like One Medical, if there isn't sort of a splintering of sort of traditional insurance where companies like yours that are sort of helping to broker these packages for people will have sort of some component that's kind of a traditional insurance company that maybe covers, I don't know, let's say catastrophic injury or something. But then you might have sort of a bolt-on or something that's something more like a One Medical where you can do your day-to-day care. They're not going to fix you if you got a broken arm, but that's where you'll go for like your clinic and your general wellness and stuff. And so, I mean, are you seeing kind of a delineation in that based on the types of services that are sort of in vogue?
So yes and no. Progress has been slow. There are interesting movements like direct primary care where people pay sort of like a monthly fee. It's sort of similar to One Medical. But the sort of rub is it's not integrated with major medical coverage. So if you do like break your arm and want to go to the hospital, but you only have like this direct primary care coverage, there's not great coverage on both sides. I think, unfortunately, we're in a situation where like a lot of the innovation has to sort of come from the health insurance carriers themselves. And I think I can't really see
that road. Yeah.
Yeah. Well, especially like some of like the Blue Cross Blue Shield companies who have been operating the same for the last 100 years. There are a few people doing some pretty interesting stuff like Oscar Health. They're out of New York, but they're all over the East Coast. They offer free virtual urgent care even, where like for those things that are a bit like higher priority than like just, I have this rash where it's like, oh, should I call an ambulance? Like you can call someone for free with Oscar and they'll help you navigate that. They also do, they have this huge list of like $3 prescriptions that like a lot of people can even get their insulin for $3 with Oscar. I think they're, out of everyone out there, like Oscar and Centene seem to be the two that are sort of like actively kind of pushing the needle and innovating in the space a bit, which is good to see.
Yeah. And I know, again, obviously I work closest with Aetna, so I understand some of like their Medicare coverage, but like I've noticed that they're starting to get more into, and maybe this is the point you're making, is they're starting to get more into, I don't know, for lack of a better term, like the touchy-feely, right? Like they're paying for yoga classes. They're paying for mental health and wellness in a way that they didn't used to. You know, there's things like that are sort of, I don't know if you'd call them preventative care, but they're sort of these stylistically cool kinds of healthy things that we do these days. And so it seems like they're at least taking the pulse of that. Because I have to imagine, I mean, even in my own life, I mean, like I go to sort of an outside provider to do like blood work every, whatever it is, 6 weeks or no, every quarter. And so I go to this clinic, it's cash pay only, and they do really comprehensive blood work. And so, but to get a similar, or to go to like my primary care provider, which is part of a big medical system, and get my blood work done, they give me a test that's about a third of the number of tests that this other company does.
What
right? So for me, there's a lot of. We just switched to a new place. It's about $200. Before I was at a place that was about $400, and so, but it was a little cost prohibitive, so I stepped away from that one. But the point is, there's a lot of medical dollars being spent on people doing sort of outside medical treatment. That, you could argue should probably be managed by your primary care so that they understand what you're doing to yourself. But at the same time, the insurance carriers don't cover this stuff. So if you want that kind of stuff, then you got to go do it. So it seems like maybe a missed opportunity. So I wonder if there isn't, room to grow in that maybe, you have your Aetna plan, but then you bolt on plans that cover these kinds of things too, so you can sort of build a more comprehensive package that covers, all those things, soup to nuts. And, you might have to go to different providers for different things, but instead of looking to the Blue Cross Blue Shields or the Aetnas to be the one-stop shop.
Yeah, I agree. And I would love to see sort of like an approach that was a bit more modular, where it's like you could sort of swap out aspects of the policy that like maybe don't make sense to you based on how you live your life, and like swap in others that do make more sense. We're not quite there yet, but I hope as like, if what we're doing catches on and more individuals are more invested in like sort of pushing for policies that actually reflect how they want to engage with their healthcare, it'll provide more of a reason for these carriers to ultimately respond to that and give us an avenue. And so I think this is sort of a baby step in that direction, but like we aren't yet able to, it's not quite an auto body shop yet where you're like, I don't want that engine, I want that one. But like it's a pretty big car lot. And so we might be able to find you the car that's closest to sort of like the car you have in your head. And then hopefully sometime down the line, we can get you like your own rim package, your own, this and that.
Yeah.
Well, Ryan, it's like the fact that you're taking it outside of the insurance for not only just the blood work and the physical therapy and this, it's like you almost, I bought this audiobook and I haven't had a chance to read it yet, but the whole thing is it talks about never pay the first bill when it comes to medical. And that's the name of the book. Don't pay the first bill, because there's negotiating involved in getting it all settled. And I just think it's sad that we have to take it on ourselves to go find cheaper physical therapy, because if you go through the insurance in the first place, you get screwed in the end. So I applaud you for going down this road and trying to help people out. I hate that this conversation has been so negative, and I hope that this conversation has been good in general for you and what you're trying to accomplish. And we're kind of at that time, and I hate to end on a negative note, but can you tell people where they can reach out, how they can get in touch with you, if they want to get a quote, if they want to work with you, where can they find you?
Yeah, absolutely. You can find us at StretchDollar.com, spelled like stretch, spelled like dollar. And yeah, I think it's important to sort of state that like things aren't perfect, and even though they're a little better with us, I believe like this is still expensive. 1 million fewer small businesses right now offer health benefits than did in 2010. So there are a lot of people right now who are sort of stuck right on the edge of like wanting to do something for their employees, not sure if they can go all the way to a group plan. With us, there's no minimum contribution, no minimum participation. You really can offer what you can afford, and then we can work on our side to make sure that people land in the best possible place for them. Like I think sort of like the riskiest thing right now is like us just getting so nihilistic that nobody cares about health insurance at all, and then we all just get our own medical bankruptcies when it's our time to. There's a different, better pathway, and I think it's worth just looking.
Yeah. Well, and
I would say too. Oh, sorry, Mike. Go ahead.
I was going to say it's a write-off too. So if you have employees and you want to give them something as far as like helping out in this, if you need a write-off, there's a good reason to do it in the first place. So, and the ability to kind of, not get, okay, I can't afford $600 a month for every employee I have, but I can afford $200 a month. That's a good solution to at least get the ball rolling and give them something that you can help out them and also get the write-off in the process. So it's nice to have that if you're looking on the brighter side of things.
Well, and I just wanted to add too, like, I don't want to characterize this conversation as being negative, because I think we're expressing basically the sentiment of people generally in terms of their health care and the frustrations that people are demonstrating. So I don't think we're being negative necessarily. And I think we're actually kind of showing, that people are out there making positive steps in the right direction. Is it something we can fix overnight? And it's funny, like if you look sort of at our nation generally, I mean, there are a lot of these little things that happened 100 years ago that just still we do it that way because we always did it that way. You mentioned the insurance thing, which is really interesting. But those kinds of things are everywhere, where we just do it the way we do it because we always did. And
if you go back 100 years, like you would go to the doctor, your local physician, and you'd bring a carton of eggs because that's what you had to trade for. It's like that was literally you had a kid, he comes out to your house, takes care of it, and you trade him a horse, or like whatever. It's like it was almost more of a barter system, or you pay what you can, and it was like the small town vibe. And that now it's just gone so out of control and crazy that I don't know how you rein it back in, but it is, it's funny. You just go back 80 years or 100 years, and it's changed so much. Just like you mentioned in that one. Yeah. It's weird to think about.
But I think things like StretchDollar and people who are making an effort to try and improve this space and help people, maximize their dollar and things like that, but not necessarily have to make the sacrifice that you might have doing it in a traditional way where you're stuck, with whatever the employer's got and that kind of thing. I think that, it's all growth and it's all progress in a certain direction. And, it could be the kind of thing that dovetails into some sort of universal healthcare down the road, or, as AI takes over and everyone loses their jobs and we have to start doing some kind of different thing, you just never know where this trail ends. But I think people, like yourself and others who are investing in this and understanding that it may not be the system you want, but it's the system we got. So let's make the best out of the system we have, with an eye on the future and an eye on what's next and how can we continue to improve. And I think from the small business perspective, this enables an option or a range of options that maybe weren't possible for them before. And, and I think that that's a positive thing too. It maybe will enable the stat you just mentioned is incredible. We kind of glazed over it, but the fact that so many fewer businesses are offering insurance benefits now than did in the past is wild, especially if our 100-year-old premise is that, that was a big key for retention and new employment was bringing people in.
Didn't that have a lot to do with Obamacare coming out? Like they made it to the point where, you have to provide some sort of insurance, or like there was a stipulation that a lot of people just dropped coverage altogether because of the way it rolled out. And I don't know the nuances, but I think that had something to do with it.
That did absolutely play into it. Partly because like some businesses realized that like if they didn't offer anything, their employees could get subsidies elsewhere. The penalty you're referring to only kicks in if you're a qualified large employer. So in most states, that's 100 full-time employees or more.
Well, I know like when it rolled out, I had some family members that was like working for Walmart or whatever. Yeah. They were full time, and when it rolled out, they cut their hours to part time so they wouldn't have to. It's all, anyways. Yeah. Enough of that.
And that's
I don't want to go down that.
I think the point is there's greed everywhere, there's corruption everywhere, and those things are going to exist. But I think as long as we can try and make a little incremental improvement or maybe make access more easy, then we're in a better place than we were before. So thank you so much, Marshall, for taking the time to talk about it. Really appreciate it.
Of course. Awesome. Thank you for having me.
Absolutely. And thanks so much for tuning into the show this week and every week. See you guys next time.